Indicators are useless, they lag and they make you lose money. And yes, indicators do lag. But here's the truth most traders don't understand. If you know how to read them properly, indicators can be one of the most powerful tools to make consistent profit. And in today's video, I'm going to show you one of the most powerful indicator in trading, that is the Bollinger Band. I'll combine it with my favorite stochastic oscillator to find high probability trade setup that most traders completely miss. And best part, you can use this exact strategy on OTC market right now. Here I'm using 20 period with 2 standard deviation, the most powerful and widely respected setting in Bollinger Band. Now listen carefully because this is where most traders mistake. These three lines are not just random line in the chart, they actually act as a very strong dynamic support and resistance level, but most importantly they are powerful reversal zones. When the price reaches the upper or lower band or the middle band, the market often prepares for a potential reversal move. But we are not going to only rely on Bollinger Band, we are also combining it with my favorite indicator, that is stochastic oscillator. And the setting of stochastic oscillator is default setting, no changes at all. Now I'm fully ready to take trades. The indicators are set, and on this particular currency pair I can already see potential put opportunity forming. I am a little bit late, but I'm waiting for the candle to go a little bit up so that I can place my marginal safety entry. But now let me first explain the logic behind my trade. First, the Bollinger Band middle line has already been broken, which indicates that the market has started shifting towards bearish momentum. Second, the stochastic has given me a clear crossover, that is a bearish crossover, confirming that the market is likely to move downwards. And third and most important, the candle has not yet touched the lower line of Bollinger Band, which acts as our reversal zone. Here I have already taken my put entry. Yes, I am a little bit late because the candle did not go up as I expected. However, because of these three confirmations, I have placed my put entry and this should be a winning trade. So let's see how this candle react and I will place my next trade accordingly. Alright traders, while this trade is still running and based on my analysis, I'm confident that it will close as a winning trade, but I'm not just sitting and watching the chart. A professional trader always scans the market for next opportunity, and right here on this currency pair I can see another perfect setup is forming. This is exactly the kind of structure I wait for. A put entry is developing, but I'm not going to jump. I will wait for the confirmation. If this current candle close below my middle line of Bollinger Band, I will be taking my put entry right at the opening of the candle. So let's watch how this candle closes. This is forming a green candle, no matter green or red, but it should close below my Bollinger Band middle line, and exactly it did so. So this is the reason why I've taken my put entry. The stochastic is also telling me that there is a bearish crossover and momentum is bearish. So this is exactly why I've taken my put entry with all the confirmations. Let's watch how this candle closes. This setup looks very clean and powerful, but as you can see, the current candle is closing as a green candle. The recent momentum of the market was bullish, which means the market can still form one more green candle before continuing the expected move to downside. However, this is where risk management and professional trading mindset come in. If this trade happens to go in loss, I will execute my one-step martingale trade, but not randomly. It will be based on my strong market structure. If I have to mark my supply zone, you can clearly see that there's a huge fair value gap present in this area. This tells me that the market has already started shifting from bullish to bearish momentum. On top of that, we also have a breakout from my Bollinger Band middle line, which is another strong confirmation that market is losing its bullish strength. This is a hidden concept that many beginners traders completely ignore. Whenever the market shifts from bullish to bearish, we must focus on identifying strong supply zone. And right now, this supply area is giving us a very powerful confluence. My indicators are also confirming the move. The stochastic oscillator has given me a bearish crossover and the market structure is supporting a downside continuation. This is why one step martingale is required, and this is my calculated decision. Without a doubt, this setup has a very strong probability. Even if the first trade losses, the next entry, my one step martingale from the supply zone, will cover the loss and still I will book a solid profit. So let's see how this candle closes. You can see this red candle is going exactly in my favor, and if this red candle closes above my Bollinger Band line, then I will not be taking any more trades in this situation. So the market market, this candle is rejecting from my middle line of Bollinger Band, and as I said, this is a winning trade. However, this red candle has closed above my Bollinger Band middle line, which will now act as a support, and in this situation I will not be placing any call or put entry. Alright traders, the market has given me almost the exact same condition. Again, the stochastic oscillator has given me a crossover, and at the same time we have a clear breakout from the middle line of Bollinger Band. That's the reason why I'm going directly with a put entry trade here. Now if you look closely, there's a very little space left towards the lower Bollinger Band, and the recent red candle has already fulfilled the previous green candle, which means the market has still tendency to print one more small green candle. That's why I'm not overexposing myself. I have only placed one put entry trade here, and that's a calculated risk and not an emotional trade. And I'm fully aware that even if this trade goes in loss, I will execute my one-step martingale trade based on the same setup. Now watch this carefully. Look at the last 5 seconds of the candle reaction. That reaction was sudden and very powerful. The price got rejected perfectly from the Bollinger Band middle line, and because of that strong rejection, I am not hesitating anymore. I'm going back to back with my 3 put entry trade here. That rejection told me that the market doesn't want to go up and the sellers are stepping in aggressively. At this point, I am more confident that the next candle is definitely going to be a red one, which is why I have placed my trade very confidently. And remember, the overall trend of the market is still downtrend. So let's watch how this candle reacts. No matter how much this candle moves upward, based on the structure and the rejection which I just saw, this candle is very likely to close as a red one. And there we go, exactly how I expected it to close. The analysis was clean, the confirmations were clear, and the market respected the setup perfectly. This is a winning trade. Out of 3 trades, 2 trades are closed in profit and 1 got refunded. That's how calculated trading works. Not guessing, not gambling, but waiting for the right confirmations and executing with confidence. Alright traders, I hope you learned something valuable from this strategy, but remember, watching is not enough. You need to practice this strategy on your demo and understand the setup and train your eyes to spot these opportunities. And if you are not yet part of my Telegram community, you are missing a lot of valuable updates. Make sure to join it. The link is mentioned in the description box below. With that said, I'll be back soon with another powerful trading video. Until then, keep learning, keep improving, and as always, happy trading guys.